Hi, we are in the second complete comprehensive example in this chapter of cash flow statement. Let's go to the example sum 2. Example sum 2. From the following balance sheet of SRS Limited and the additional information as of 31st March 2020, we are asked to prepare the cash flow statement. To the left of the screen, we have the balance sheet. On the right, we have notes to accounts for the given balance sheet. Please go through the balance sheet as well as the notes to accounts. Below the balance sheet, we have additional information. Income tax paid during the year was rupees 35,000. Dividend paid during the year, rupees 30,000. And interest on bank overdraft for the year, rupees 4,000. We'll begin by listing down the ledger accounts that have to be prepared. Ledger accounts that need to be prepared. We need to prepare the provision for tax account, and the dividend account. There is no other account that needs to be prepared. Provision for tax account. As per additional information 1, we have that the income tax paid during the year was rupees 35,000. So to bank account for the tax paid, is 35,000 rupees. Now there is no other information regarding the tax. There is no mention about the opening or closing balance of the provision for tax, nor is there any mention about the amount of provision for tax. So we have to make the provision for tax by statement of profit and loss. The balancing figure will be the tax paid itself, 35,000. Let's move on to dividend account. Now again, as per additional information 2, the dividend paid during the year was rupees 30,000. So to bank account for the dividend paid, $30,000. There is no other mention of any other amount, so we need to provide by surplus, that is balance in statement of P&L will also be 30,000 rupees. The ledger accounts are done. We'll move on with the solution of preparing the cash flow statement. Solution. SRS Limited cash flow statement for the year ended 31st March 2020. particulars, inner column and the outer column. We'll begin with Roman number 1, cash flow from operating activities. We'll begin with net profit before tax and extraordinary items. As per working note 1, let's go ahead and prepare the working note. Working note 1, calculation of net profit before tax and extraordinary items. Let's begin with the net profit for the current year. It is the difference between the closing balance and the opening balance of surplus, that is balance in statement of P&L. We have the amount given in the notes to accounts. The first note, so it's 1,85,000 rupees minus 50,000 rupees, which is equal to rupees 1,35,000. There are no transfer to reserves as per the note 1, reserves and surplus. Let's check out the provision for tax as well as the provision for the dividend. Now in our provision for tax account, we have by statement of P&L, provision made for the income tax. We need to add this amount. Add provision for tax, 35,000 rupees. And we also made the provision for the dividend paid, 30,000 rupees. Dividend paid, 30,000 rupees. The final answer, which is the net profit before tax and extraordinary items, is rupees 2 lakh, which we will insert in the cash flow statement. Next, we need to make adjustments for non-cash and non-operating items. Now there is an increase in the value of fixed asset. So there is no depreciation on fixed asset. There is only purchase of fixed asset. There are no intangible assets for amortization and no loss on sale, etc. There is an amount for interest paid on bank overdraft. In the additional information, third one, interest paid on bank overdraft for the years rupees 4,000. That is the only item which has to be added. So add interest on bank overdraft, ₹4,000. There are no items to be deducted also. So 2,04,000 rupees is the operating profit before working capital changes. . Next, we will go ahead and make adjustments for working capital. We need to add the increase in current liabilities and the decrease in current assets. Let's check out in the balance sheet the current liabilities. There is a trade payables current liability which has increased. So for trade payables, the amount of the increase needs to be added, which is 20,000 rupees. The difference between 1,05,000 and 85,000 rupees. There are no other current liabilities. Let's check out the current assets. Inventories has increased in value, so we need to deduct that amount. But the trade receivables or the debtors has decreased in value by 30,000. So trade receivables ₹30,000, rupees 50,000 to be taken to the outer column. ₹2,04,000 plus 50,000 rupees is ₹2,54,000. We need to deduct decrease in current liabilities and increase in current assets. We have inventories which has increased by 10,000 rupees. So inventories, that's the only item. 10,000 rupees to be deducted. 2,44,000 rupees. This is cash generated from operations. We'll go ahead and deduct the income tax paid. As per the working note, the income tax paid is 35,000 rupees. ₹2,09,000 is the final cash flow from operating activities. Let's move on to Roman number 2, cash flow from investing activities. We'll check out whether there is any purchase and disposal of fixed assets or investments. There is a purchase of fixed assets for rupees 2,80,000. 2 lakh opening balance has gone up to 4,80,000 rupees. So there's a purchase of fixed assets. Payment made for purchase of fixed asset. ₹2,80,000 outflow. There is no other item for purchase and disposal of long-term investments or fixed assets. So cash used in investing activities. ₹2,80,000. Let's move on to Roman number 3, cash flow from financing activities. Check out the changes in size of capital and borrowings. There's an issue of shares. Rupees 3 lakh has become rupees 4,50,000. So issue of shares is 1,50,000 rupees. There is a short-term borrowing, bank overdraft. The opening balance is 50,000, but the closing balance also remains as 50,000. There is no change. So we will ignore that item. In the additional information, we have dividend paid during the year was 30,000 rupees. So dividend paid 30,000 rupees. Interest on bank overdraft, the third item. Rupees 4,000. So the final amount to be taken to the outer column, 1,16,000 rupees. Cash flow from financing activities. Let's move on to the fourth item, net increase/decrease in cash and cash equivalents. Operating activities is plus 2,09,000 rupees. Cash used in investing activities minus 2,80,000 rupees. And the cash flow from financing activities is plus 1,16,000 rupees. So the net increase is 45,000 rupees. 5 is opening cash and cash equivalents. As per the balance sheet, the opening cash and cash equivalents, it's 85,000 rupees. This is equal to closing cash and cash equivalents. The closing cash and cash equivalents as per the balance sheet, closing balance sheet is also 1,30,000 rupees. I'll remove the split and we can view the answer. Example sum 2 at the top. Additional information and the ledger accounts that we've prepared. These are the two ledger accounts that we've prepared. The solution: cash flow statement. The cash flow statement is followed by the first working note 1, which is calculation of net profit before tax and extraordinary items.